This episode will look at Indonesia's consumption stimulus plan, cut or hold for the Bangko Sentral ng Pilipinas as the Philippine peso is under pressure, more Chinese firms expanding to Singapore, and earlier changes at the helm of the European Central Bank.
Hi, I'm Peter Lundgren, founding CEO at Lundgren's Capital.
And I'm Mel Lopez, Chief Economist for ASEAN.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgren's Investor Insights. Join us as we dissect the biggest and most interesting news on economies, financial markets, and central banks globally. Welcome to the show. Hello, Mel. How are you today, and how's your week been so far?
Hi, Peter. Welcome back to Manila. It's always great to do this with you in person. It's been an eventful week, of course. Busier amid all the holiday buzz. So happy Lunar New Year to those who celebrate. And it's been a productive time to kind of plan what's ahead for our team at Greens. And of course, for my end, it's all about publications and communications, and of course, getting our insight out there. So, how about you, Peter?
It's great to be here together with the team in Manila. It's busy, as you say, and there's also business to take care about in Europe. Yeah, it's actually sort of a two-layer job, but it's okay. It's nice to be here. Interesting in many ways, of course. Also good to see Asia live always when I'm here to meet people, and was a bit in Hong Kong a couple of days last week having meetings to get the on ground feeling for simply the bustling economy that is still very strong. That's good to know. Anyway, we will start, of course, in Southeast Asia today. Let's focus on Indonesia once more. It's interesting.
Yes, we did talk about Indonesia a couple of episodes past, and it's not been good what we've said. Several concerns all at once regarding the Indonesian markets, and it's mostly political concerns as well as credibility concerns, which are spilling over to the markets. And right now, Indonesia's new plan is a stimulus program for the first quarter of the year, to the tune of $760 million. So in current local currency terms, it's 13 trillion rupiah. And it's mainly meant to boost consumption in the first couple of weeks of the year. The plan is to provide some food subsidies for rice and oil mostly, as well as support for transport fares to encourage residents to travel a lot more, eat and celebrate, I guess, in a more grand manner as they would have otherwise done, because prices are rising in Indonesia. So it comes at a critical time. It's Ramadan has just started it's a month-long observance for the Muslims. And they usually have to fast all day and then break that fast in the evening. So the hope is that during that evening meal, you go a bit all out, I guess, to consume. And then once the month-long fast ends with Eid al-Fitr next month, the celebrations are kind of grand. So you buy new clothes to celebrate that milestone. You travel to reunite with family. And of course, with that are big banquets, I guess. So that is the hope. It's coming from 2025's missed growth target. So the government wanted 5.2%. They were at 5.11. So okay, that's a bit of a that's missed, but not too far behind. But then again, President Prabowo may also be using this as a way to, of course, solicit more support. He is declining in terms of popularity. So, of course, there is that factor. And it's also a way to cushion higher consumer prices. So, inflation is a bit on an ascent for the last 3 months in Indonesia. So, As far as fiscal metrics are concerned, Indonesia seems better positioned. Their debt burden is under 40% of GDP. Of course, as we often say with these consumption stimulus programs, it's a good short-term fix, but it doesn't really provide permanence as far as resolving pressing issues are concerned. It's also costly. You can't do this every quarter for sure. So is this the best spending of taxpayers' money? I don't think so. We don't think so. And as we always say with these programs, these funds or this attention would be better off if shifted to something more long term, more structural, more productive. So we did say a few episodes ago that Indonesian stocks are a bit facing a red flag for corporate governance issues. It's creating credibility concerns, lack of transparency in terms of sweetheart trades. So if you instead pour that attention into addressing those issues that's hounding the market,
Yeah.
the country, of course, will be better off. And soliciting more investments inward is surely more pronounced in terms of impact rather than just a one-off celebration bonanza. So there is that concern.
We could see Asian economies, Asian governments do everything to keep the momentum in Southeast Asian countries, and this is we should almost think that the Indonesian government is listening to this podcast. What we for sure know was that the piece we written lately and published on the coming Indonesian so-called sovereign fund, where we are very critical as well, that gained a lot of high quality positive attention in Indonesia. I was not aware we had so many people in Indonesia reading what we are publishing. We are very proud and honored of that, and thank you for that. But this is actually a bit in line with, we think it's extremely positive that Southeast Asian economies or governments are using and utilizing the possibilities that still are fiscal possibilities that still are available to keep the high momentum, growth momentum in these countries. But we do not agree with how the intentions are carried out. As you say, like today we've seen in Thailand as well, handing out money. It's pretty disparate, and we argue that the money should be given as handed out or used in really high quality reform work. And how does that look? It can be a lot of things, but it is also to invest into IT infrastructure, national IT infrastructure, for example. It could also be to reform life for corporations, ease of doing business. All these
definitely useful.
Yeah. And recognize that the households actually have money, and even make it even better conditions for startups. There are truckloads of fantastic good opportunities for Southeast Asian governments to do something that mature governments have big difficulties doing, and this way they can win and gain. Investors would really favor these kind of things. So it's not from our side just to be sort of negative and not making friends, but actually to point at issues that could be utilized in a much better way. Good. We will see. We know that somebody in Indonesia sort of
listening,
following what we're doing. So these are a couple of ideas. Anyway, we stay local.
Yes.
And focus on the Philippines, a bit sort of a reaction on what we are seeing, in particular the currency market, and what could be upcoming decisions for the central bank to consider. And it is now precisely about the Philippines, but it is the factor, again, considerations across the Southeast Asian board of high growing economies. But they are feeling as a bit of headwind. We've seen it. Some GDP numbers are lower
Yes.
than expected. And here it's our call is probably not what we see mainstream call when we take
Definitely.
the Philippines. We could discuss about rate cuts from the US, but we see it as still more likely that there will be more rate cuts in US. Normally, many Southeast Asian countries will follow that
Yes.
sort of,
As we always do.
yeah,
Yes.
pretty fast. We encourage a country like Philippines to stay firm on rates. The reason is the US dollar has lost a lot last year, 15% sort of, if we look into against the euro, 14%. But the Philippine pesos has even lost more, particularly the last
Yes.
4 months. And this is dangerous because what has been doing well since early last year is actually inflows to emerging market countries from investor inflows. And a big part of the bet from investors, international investors, when investing into emerging markets is actually the currency bet. Most leave the currency unhedged, meaning they keep it in the local currency. Some convert the currency risk into what we call a hard currency, like US dollar, euro, or yen. But you also lose a lot of the interest rates spreads towards the home currency that's typically is hard. So what we have now is that the Philippine peso is actually moved a bit weak. We would say how does a currency crisis look like? Yeah, this is how a crisis can start. This is not our primary scenario, that there will be a currency crisis in the Philippines. But this is how things start. That all of a sudden, a central bank is too loose because it is pleasant, good for Philippine export.
For remittances as well.
Exactly, yeah. If things starts to be too uncertain about the currency, in this case, the Philippine currency, investors, they would very, very fast not maybe pull the investments out of the Philippines, but they will simply hedge the currency, meaning they will go out and sell truckloads and big amounts of Philippine pesos and buy US dollar in the market. And the first thing it does, it generates high inflation
Yes.
in domestic Philippines, and that hurts normal households. And it increases uncertainty about economic policies, and again, it hurts back on the currency that will be hurt one more time. So the best thing the Philippines central bank could do, and they have a meeting today, Thursday, is to signalize, actually to go out and say, we will stay firm on the rates despite US are cutting. It might be pleasant to cut the rates because also they think stimulates economic growth domestically. It does not necessarily is the case. And to say they want to protect a strong currency policy. That would be the best that the Philippine government could do right now. And we're talking about today.
Yes.
But also next time they meet. But simply take this strong stand. This is a message. I've been in a couple of live TV interviews on business channels in the Philippines today. Depending on where the conversation goes with the host, this is what we would call for on these national-wide TV stations. So we actually mean it. Yeah.
It's quite a contrarian view, Peter, because the consensus now is they would cut another time this week. I mean, today in a few hours, the results will be out. But yeah, the expectation really is rooted on the central bank doing what it can to support growth. But then again, we go back to its mandate with this, which is price and financial stability. So it's not really directly growth per se. And I guess in that sense, in a way, supporting the PHP, the peso, falls under that more than directly supporting growth. Of course, they do want that as well, but it is a tricky balance. We know that a weaker dollar could have made the case for a stronger peso, but at the same time, how the currency has been performing currently just shows that there are local factors that are pulling its prospects down. Of course, we know that a lot of it is also reputational with the corruption scandal in the Philippines. That is never good for the market's perception. So
yeah, it's again, we are maybe not making so many friends out there, but we need.
countries in Southeast Asia in one episode.
But we simply need to say as a this is the way we see it, and financial market insight should never be about pleasing people. It should be about what is the best path to follow, and
Yes.
but that is sure a position up for discussion.
Yes.
So, but important is to say we are not forecasting a currency crisis.
Mhm.
But I've been 40 years in the market, and this is how a crisis can start if it all of a sudden spirals in the wrong way. Anyway, good.
Yes.
Let's move on to some corporate business in the extreme big neighbor to the Philippines, that is China. Well, what are they up to now in China?
Yes, Peter is still favoring Southeast Asia, but our richer neighbor. Chinese firms, more and more of them, are pursuing business expansions and placing their headquarters, their main offices in Singapore. So we know that the city-state is not really on a radar as much because it's very developed, unlike the rest of the emerging markets in ASEAN. But it is the most prominent one among the Southeast Asian peers for a reason. It might sound boring for us, but that is where the capital is. A lot of these Chinese firms have actually beaten American firms in terms of business expenditures in Singapore in 2025. So that's quite a surprise for many. So a lot of it is rooted in their search for growth. So we've seen China slowing down as far as consumption is concerned domestically. And of course, there is that tariff war and Trump factor that is kind of making it a no-go zone for some. But of course, we see otherwise. China is still very much a vibrant economy, even when someone like Trump is picking on them. And then, of course, they also want to access capital that is available in Singapore. So Singapore hasn't been growing as fast as its neighbors simply because they are concentrated in specific industries like finance and property. Now, the best example easily is TikTok. So we've heard that in US congressional hearings that as much as it is a Chinese developed social media platform, it describes itself or it is headquartered in Singapore. It has Singaporean citizens as part of its board, of its head. So it is one of the ways where it is able to access a wider global reach versus if it stayed in China. Shein, it's a very fast fashion platform for basically everyone. I think it's very popular in the Europe, it's very popular in the US, it's very popular here in Manila. I use it. It's very accessible clothing lines. It all ranges from a lot as well. So robotics, there are some robotics companies in China choosing to transfer their headquarters in Singapore. And really, what we see here is it's the best place. The best place to pursue expansion is Southeast Asia. And in this case, it's Singapore that's being their gateway to the rest of the bloc. So, of course, locating your business within a Southeast Asian company, within a Southeast Asian country lets you access the rest of the region. Trade barriers are basically frictionless. So it is a high growth zone. So we get why they like it. And if that's their way to uh, avoid more tariffs or more non-tariff barriers to trade with the rest of the world, then I get why they are aggressively pursuing this expansion plan. Of course, we know before that Hong Kong used to be the option, but well, now that we hear it is on the radar of mainland China as well as far as acquisition or reacquisition, whichever perspective you take. So you'd want to take a bit more distance from that, and yeah.
Yeah, that's interesting. predominant Chinese names, but below that there will be the truckload of other Chinese names within the same sector and e-commerce, and in the hunt and search for, as you say, growth, but also to keep revenues. They will hoard outside China. Yeah. So we can feel there's a pressure in many ways. And we're also talking about sort of manufacturing, sort of oversupply.
Yes.
So there's a lot of oversupply coming out of China, and that will also keep corporate profits maybe a bit under pressure in several areas particularly within these segments. Also in the West, and this is worth for investors to study these enormous, because we're talking about enormous waves. As it's not just a company; it is a complete wave within big business sectors that are flushing out of China and trying to find more business somewhere outside China. So this is for sure worth to observe for investors, both investors invested into competing companies in the West,
Yes,
and of course those investors who are looking for companies to invest into in China. Say, so how is this positive or negative? We know it's because they hunt profit.
Yes.
And because they're under pressure in China. It's not necessarily just sunshine. Yeah.
Yes.
Good, but interesting, and it is a interesting flood wave, such as a sort of flooding out of China here. Big thing. Let's make a small jump to Europe and say, okay, we know that ECB at some time, or officially in April, actually next year, will get a new president. Christine Lagarde is stepping down. But what has been rumored today, and it is on the front page of Financial Times. So when rumors reach that position,
The banner story,
we see it as a bit more than a rumor.
Yes.
And it is at least rumors coming from people very close to Ms. Lagarde that she will step down earlier. And the simple reason is to get the current French President Macron a say in when choosing who should be the next ECB president. So all of a sudden, the run for the position will gain pace much earlier, and you could say, okay, it's more than a year, yeah, but already based on the original time schedule, the short list of potential candidates is already in work.
Yes.
And now this will happen faster. And it is, of course, not uninteresting for investors to get a feeling for who will be the next, because it does signalize a bit about sort of where are we in terms of Hawk versus Dow. Yeah. And there are a couple, probably four candidates in the game now. For me, it looks a bit more towards maybe the Netherlands or Germany, as a meaning a bit more hawkish.
Yes.
Sort of way of addressing monetary policy. But again, we will also have one of the most leading central banks in the world having a pretty long transition period, searching for their head. Yes. And whatever the new direction will be. And that's, of course, a bit critical. We pay attention because we value it a bit, saying, okay, so who is the head for this kind of institution, and not uninteresting. Will it change a lot for investors? A bit long term, yeah. Yes. But not today. Stock markets won't move on that one today.
Europe will remain a low growth zone. There's only so much central bank can do to really push everything forward. So
but interesting. Good. We will turn to the sunshine in the world. How much do we have sunshine to offer? We've been a bit critical again. So what do we say, Mel?
We are always critical when it's necessary to be, because of course we'd like to see, of course, more growth than less of it. And with what we discussed today, there seems to be, some flickers of concern growing within Southeast Asia. As we said, it's not our primary case, but it merits close watch. But still, these clouds aside, there remains enough sunshine for us to look positively towards this part of the world. There remains to be a lot of moving parts that could affect markets. But at the same time, these governments have also a lot of elbow room to get things done right, focus their energies, their resources better to get better results. And that's what we're hoping they would do.
We continue to overweight risk. Overweight is towards emerging markets and sort of the stock market in general.
Yes.
So we have no change in our stand. Do we argue for higher volatility than we see today? Yes, and that is also higher volatility than we have seen for like 3 months ago, where we started to argue for the volatility to come. But is it enough to step out? No, it's still not. So we keep the same view. We can live with high volatility. We like the risk. We take the swings as they are, but right now we would actually keep the positions as they are. The world is okay still.
Thank you, Peter, and thank you to our listeners.
It's a pleasure. Thank you. Thanks for tuning in. We'll be on the lookout for market developments worth watching. Catch the next episode of Sound Economies, Mel and Peter on the global financial markets, available on our website and on Spotify.
Here at Longines Capital, we've spent over a decade building a strong track record with our full suite of services and high-performing funds. Now we're setting our sights on something even bigger, an IPO in November 2027. It's been a long time coming, and we are ready for the journey. Join us in our next big step. Visit our website to learn more.